Bitcoin bulls aim to capture $45,000 leading into Friday's $890 million BTC options expiry. BTC price is retesting underlying support on March 3, but derivatives data hints that bulls may launch an assault on $45,000 as March 4's options expiry approaches. Bitcoin, BTC, bulls flipped the table on March 4's options expiry after a 14% rally on February 28. Holding the price above $43,000 confirms a decoupling from traditional markets. For instance, the MSCI Emerging Markets Equities Index is down by 3.5% in 5 days, while the United States Russell 2000 Small Capitalization Index gained 0.9%. Investors are increasingly concerned about the ramifications of the U.S. Federal Reserve rate hikes expected throughout 2022. As a result, in the past 30 days, some big names took a hit. For instance, PayPal PYPL traded down 38%, Meta corrected 34% and Shopify Shop lost 31.5%. The 40-year high U.S. Consumer Price Index 7.5% inflation data caused investors to take profits on riskier assets, and the U.S. Dollar Index, DXY, to reach its highest level in 20 months at 97.6. The DXY measures the dollar's strength against a basket of top foreign currencies and increases when traders seek shelter in the North American money. Bitcoin's recent strength surprised most investors as its correlation versus the Nasdaq Composite Index reached 73% on February 20, nearing the 74% 5-year high in 2020. Call, buy, and put, sell, option instruments are evenly matched for the March 4 options expiry, but bears were caught by surprise after the Bitcoin price stabilized above $43,000 this week. A broader view using the call-to-put ratio shows a balance between the $450 million call, buy, open interest versus the $440 million put, sell, options. However, the 1.02 call-to-put indicator is deceptive because most bearish bets will become worthless. For example, if Bitcoin's price remains above $43,000 at 8 a.m. Coordinated Universal Time on February 11, only $155 million worth of those put, sell, options will be available. This difference happens because there is no use in a right to sell Bitcoin at $40,000 if it trades above that level on expiry. Below are the 3 most likely scenarios based on the current price action. The number of options contracts available on March 4 for bulls, call, and bear, put, instruments varies depending on the expiry price. The imbalance favoring each side constitutes the theoretical profit, between $42,000 and $44,000 to 560 calls versus 150 puts. The net result is $175 million favoring the call, bull, instruments. Between $44,000 and $46,000 to 760 calls versus 40 puts. The net result favors bulls by $320 million. Between $46,000 and $47,000 to 840 calls versus 5 puts. Bulls boost their gains to $380 million. This crude estimate considers the put options used in bearish bets and the call options exclusively in neutral to bullish trades. Even so, this oversimplification disregards more complex investment strategies. For instance, a trader could have sold a put option, effectively gaining a positive exposure to Bitcoin above a specific price. But, unfortunately, there's no easy way to estimate this effect. Bitcoin bulls need a 1% pump above $44,000 to score a $250 million profit on March 3. On the other hand, bears' best-case scenario requires a 4.5% price drop from the current $44,800 to cut their loss down to $110 million. Bitcoin bears recently had $300 million leveraged short positions liquidated, so it's unlikely that they will have the backing required to pressure BTC price in the short term. With this said, bulls will probably continue to display strength by pushing the price to $45,000 or higher during March 4 options expiry. The views and opinions expressed here are solely those of the author and do not necessarily reflect the views of Cointelegraph. Every investment and trading move involves risk. You should conduct your own research when making a decision.